Okay, taxes can suck, but what sucks even more is getting them wrong or paying too much. So I asked my friend Joel, who is one of the founders of Elevated Tax Strategies, a licensed accounting firm here in the US, to break down 4 different strategies to minimize your crypto taxes legally when you're ready to cash out. So, Joel, what are crypto taxes?
Crypto taxes aren't too different from regular taxes, but they're taxes on crypto activities that you may have, whether it's crypto income from mining, whether it's crypto capital gains from trading and selling and exchanging different currencies, or, whether it's crypto losses when you realize positions that you no longer want to hold. All of those events could be crypto taxes, and they can be very simple. They also can be very complicated.
And then talk to me about, within the crypto tax sphere, when is it a taxable event? When does the moment happen when you initiate, I've got to pay taxes on this thing?
That's an excellent question. And I think creates the most, I don't know what to do. So I think it's much easier to determine when is it not a taxable event. And usually when you purchase crypto with fiat, it is going to be a non-taxable event. And when you move your crypto into another one of your controlled or owned wallets, it's going to be a non-taxable event. Anything else, probably a taxable event.
So if your crypto goes to the moon, you sell said crypto, congratulations, you have a taxable event on your hands.
100%. And if you then take those sales and invest it somewhere else, you have another taxable event. You're just lining them up. So that is one of the ways that can happen.
And usually those types of things are going to fall into the category of capital gains taxes. So explain to me what capital gains taxes are, what short-term capital gains, what's long-term capital gains, and how do you factor what you owe in that scenario?
Yeah. So capital gains is just a fancy word for you have property, you got rid of it, it's no longer in your ownership or possession, and you either made money on it or you lost it. So if you have property such as Bitcoin and you went ahead and sold it, well, you have a capital gain or capital loss, depending on how much you sold it for. If you sold it for a profit, well, now you have a capital gain and you have capital gain taxes. If you sold it for a loss for less than what you initially bought it for or have basis in, well, now you have a capital loss.
And how do you calculate what the amount you owe is based on that gain or loss?
Usually what you're going to do is you're going to be taking the initial money you put in and then the initial money you got out. So if the money you got out is higher, well, you have a capital gain, and there's certain thresholds for capital gain, depending if it's short-term or long-term. Usually short-term is this event took place in less than a year. You owned it for less than a year. Long-term is you've held it for longer than a year. And those both have different tax treatment. Now, when you go ahead and hold that crypto and you don't sell it, well, then you have an unrealized position. That means you have not exercised it. So that's why when things go to the moon and you ride it up and down, you don't have any events happening because you haven't sold or exercised anything. The moment that you exchange it for something else, you sell it or you try to use it as, fiat somewhere else, well, now you have a taxable event that has capital gains and losses. And to calculate that, if very limited amounts, a spreadsheet may be enough. Very often I recommend a crypto accounting software. Crypto accounting software is going to be your best friend, and they're fairly easy to use. Most of them are plug and play if you don't have complicated activities.
And what's a few of those that you'd recommend?
So the most popular one that I think a lot of people use and know is Coinly. There are some newer ones like Awaken. There is Coin Tracker. There are some white glove ones where you put it in and they also do it for you when it comes to tax return and tax liability. But those are usually the more popular ones that I hear.
Now we have a kind of a starting point of what crypto taxes are and how or why you might owe. Let's talk through a couple strategies, 4 strategies, in fact, of how to minimize how much you're actually paying if you do cash out legally. So the very first strategy I would love it if you'd kind of go over is tax loss harvesting. What does that mean? How do you use it? Why is that a strategy that helps you minimize how much you owe?
Yeah. And I think if we're talking tax loss harvesting and we're talking about our first crypto tax strategy, well, that means you've reported your crypto and you know that you have some crypto liability. You have some crypto taxes to pay. Now, the very first thing you should be doing before the tax year is up. So if you're thinking about 2024, well, that tax loss harvesting is off the table. But for 2025, before the end of the year, before December 31st, you should look at all your positions that you hold, see which ones you may just want to get rid of that are at a huge loss, and you can go ahead and exercise them and realize that event and have a capital loss. Also look at the positions that maybe are just down. If you're holding a bunch of Bitcoin, Ethereum, Caspa, whatever it may be, and you want to continue holding it, but you have unrealized losses associated with it, we do not have wash sale rules yet in crypto. So you can go ahead and exchange or sell that crypto and realize the loss, and you can buy back in, and it's still considered a legit taxable event.
Tax loss harvesting. Strategy number 2, retirement accounts. Tell me about that.
Retirement accounts are cool. I think it's not talked about enough in the crypto space, where you can get a tax benefit from contributing into a pre-tax retirement account, such as a 401k or a traditional IRA, and you'll get a tax benefit for doing that. And those vehicles you can then use to invest in crypto. But if you have longer conviction and you'd like to, what is the ultimate tax play for crypto with retirement, is usually post-tax retirement accounts, such as a Roth IRA or a Roth SEP IRA or another post-tax retirement account. You can buy $100 of Bitcoin today. I just did so for my daughter last week. I bought $100 of Bitcoin. I put it in a Roth IRA, and that'll be there for the next 18 or 20 years. And whenever that money is taken out, it's non-taxable. You don't pay taxes on any of the proceeds or gains, which is pretty cool. And crypto is usually one of those most appreciating and volatile assets where it makes sense to host it in a post-tax account, such as a Roth IRA.
And there are a few requirements when it comes to like a Roth IRA specifically. Can you kind of briefly go over that a little bit?
Absolutely. So there are some income requirements into a Roth IRA. So if you make a certain amount of income over, you may be ineligible for contributing. There are ways around that. So speak to your tax professional. Also, there are also annual limits. So for 2024 and 2025, you're limited to $7,000 per person. You can't contribute more than that, at least into a Roth IRA. Some other vehicles allow you to contribute more, like a SEP or Roth 401k. Also, another limitation that you have is you have to wait. You can't use that money right away. It's usually locked until you're 59 and a half. And then after is when you can start taking distributions. There are unique exceptions and rules as to when you may be able to take out funds earlier from retirement accounts. But the general policy is don't put any money in a retirement account that you're expecting to use in the next decade.
And so which types of accounts are you seeing most people utilize here? Is it self-directed? Is it with a company that offers a Roth IRA that you can actually put these assets in? Is it a traditional brokerage account like through Fidelity or something and you're just buying like Bitcoin ETFs?
It depends. I think you have to do what you have access to and what you're most comfortable with. If you want to own true hard Bitcoin, you should probably be doing it through a SIDRA, a self-directed IRA, whether it's post-tax or pre-tax is up to you. If you want to own Bitcoin but don't want to necessarily get involved with the complexity of having it in cold storage or doing it through another custodian, you can do it through your brokerage. You can own ETFs. It's not the same as owning Bitcoin, but it's as close as you can get in a traditional stock market environment. Or you can even have your own custom IRA. There are brokers that allow you to just create an IRA and you say, well, these are the type of things I want to invest in. I want to invest in crypto, gold, real estate. Those are other self-directed custom ones that you can set up as well.
Okay, let's go into strategy number 3, which is an exciting one, which is starting a crypto business. Tell me about that.
Yes, this is, I think, if I were to rank them, I think one of the most powerful ones on the list. Starting a crypto business makes you a business owner, an entrepreneur. Some of you may be business owners and you're not even aware because you're performing work on the blockchain. And again, you probably are a business owner. You just have to classify and label yourself as such. When you're a business owner, you have business income, but you also have expenses. You have deductions. And a lot of the things in your life that you're spending money on already may be a business deduction. You may not know it. But more importantly, the activities that you have in crypto that you have for mining or airdrop farming or liquidity pool farming, whatever it may be, some of those things carry expenses. So you want to go ahead and report them to reduce your crypto capital gains, to reduce your crypto income, to reduce all of those things. So that's why being a business owner when it comes to taxes are so cool, because the personal tax guidebook is a couple hundred pages. The business one is a couple thousand because there are a ton of strategies that you can take advantage of, and a new door opens when you are a business owner.
And when do you consider making the move to doing that? At what threshold? Is there a dollar amount, or is there a certain number of things you're doing in the world of crypto? When do you decide I'm going to start an LLC or an S Corp or whatever my profession I'm working with recommends? When do you do that?
Yeah, usually if you spend $1 in a crypto business such as mining, you probably should label yourself as a business owner, as a sole proprietor. Now, you can decide if you want to kind of upgrade your business and be an LLC or be an S Corp or even be a C Corp. If you meet the right income requirements, if you meet the right strategy requirements, that again is a conversation you probably have with your tax professional. But I know Andy and I just filmed a podcast that talks a lot about that. So I think that's a good starting point.
Love it. Love it. Okay. Strategy number 4, which is estate and trust planning. Tell me about it.
Yeah, estate and trust planning. This is usually one where we call in the Avengers, where you're going to have more than one professional helping you out with this. Usually you have an attorney involved, you have a tax professional involved, and you have a financial advisor involved, either all of the above and even more sometimes. These are usually high net worth plays where you want to put away money. You want to either protect it, you want it to not be taxed, or you want it to not be associated with yourself personally. And you can do that for yourself, for your family, for your friends, whoever you want. Tons of power in different types of trusts. I've had folks set up trusts for their dogs after they pass away, and it takes care of their dogs. I've had folks set up different types of trusts for charities that they're passionate about. I've had folks set up trusts for their spouses that they want this crypto asset to grow. They want it to not be taxed if they do, pass away or something like that. You can set up a trust for yourself, and you can actually, withdraw and interact from your trust as well, if done correctly. You could be the beneficiary of your own trust. And there are, again, that's if I were ranking these different strategies, this is the one I would explore last, because usually you accumulated some wealth, some profit in order to do this correctly and set it up correctly, but it makes enough sense to spend the time to do it.
So if that sounds like a strategy you want to employ, or the other strategies, where would someone get started? How would they start that conversation and start making those moves?
Yeah, I think you just said it. It's going to be having a conversation with a professional that you trust. Again, happy to be that professional. If you do want to reach out to us, we try to make it very entry level and affordable to just have a conversation, be like, hey, sanity check. So please reach out to us. Please, go ahead and book some time and we can get you started. You don't have to start this whole endeavor by yourself or alone. There are several other wonderful professionals in the US as well that you can contact and reach out to that are experts in this space. But if you're looking to just ask a question and know, is this the right time? Again, we're an excellent starting point as well.
Yeah, and in Sleep Money Club, Joel and Elevated Tax Strategies has been a massive resource. Lots of people are already working with him and the gang over there, and have nothing but glowing, things to say. But obviously, go wherever you're the most comfortable. But if you do want to check out what Joel's all about, there will be links to Elevated Tax Strategies down in the description. And if this is an interesting conversation, a topic you want to know more about, you want Crypto Tax 101, you want to learn everything there is, well, then watch this video right here where I talked to Joel for over an hour. We went to this stuff and plus a whole bunch more. So if you have tax questions about crypto and you just want a great resource to listen while you're driving, whatever, check that out. Otherwise, I will see you in the next video. Goodbye.